Today, I wanted to address a common mistake with S corporations and how owner shareholders often incorrectly deduct their health insurance premiums. I'll give you a high-level overview of how this works within an S corporation structure. No deep dive, just the essentials that you need to know. This video is perfect for those looking to get a clear, straightforward summary without getting bogged down with all the details. So let's get right into it and uncover how you can make the most out of your S corporation benefits. Hi, I'm Noel Lorenzana. I'm a CPA. I run my business as an S corporation, and I specialize in preparing S Corp tax returns as well. Owners in an S corporation will often incorrectly pay their employee shareholders health insurance premiums directly through the company and do nothing else, thinking everything is fine. Although that's reasonable to think that, this is wrong and would not be accepted by the IRS. There's actually much more to it than that. Allow me to explain. As a more than 2% owner or shareholder of an S corporation, you have a unique position when it comes to tax benefits, and one of those benefits is how you can handle your health insurance premiums. Typically, health insurance premiums are a personal expense, but in the case of an S corporation, they're treated differently. First off, it's important to understand that if your S corporation pays for your health insurance, it's considered a taxable fringe benefit. However, this doesn't mean you lose out. Instead, the amount paid by the S corporation for your health insurance will actually need to be included in your W-2 wages. This inclusion amount turns it into a legitimate business expense for the corporation, while also giving you, the shareholder, the chance to claim a self-employed health insurance deduction on your personal tax return. I know that's a little complicated, so let me break that down into steps. In this example, we have an S corporation with one shareholder working in the business. Step 1. The company buys group health insurance for the employee shareholder. Let's say it cost $5,000. It's important to note that the health insurance plan must be opened as a company plan unless it's not permitted by state law. Also, if you or your spouse are eligible for health insurance coverage through an employer, then this wouldn't work for you. Okay, step 2. Sometime before the end of the year, you need to let your payroll company know about the health insurance premiums for the more than 2% shareholder. They will add this to the employee shareholder's W-2 amount as taxable income to them, but keep in mind, and this is important, it's not subject to payroll taxes, which is about 15.3%. Step 3. When the employee shareholder files his or her taxes, the $5,000 would already be included on his or her W-2 as taxable income, but they can also take a self-employed health insurance deduction for $5,000 on Schedule 1 of Form 1040. This effectively zeroes out any taxability of the health insurance benefits on the personal level. You might be wondering, how would someone know about the $5,000 health insurance deduction? This should be reported on the individual's K-1, the shareholder's share of income, deductions, and credits. The beauty of this setup is that it allows the S corporation to deduct the cost of the premiums as a business expense, while you lower your personal taxable income through the self-employed health insurance deduction. It's a win-win situation. Now, these are a lot of hoops to jump through, but that's what you need to do if you don't want any problems with the IRS, and if you want to properly deduct your health insurance premiums through your S corporation. So keep in mind, the insurance plan must be established under your S corporation, and the deduction can't exceed the earned income from your S corporation. These are just a couple high-level points to be aware of. Remember, every S corporation situation is unique, so it's always wise to consult with a tax professional to get advice tailored to your specific circumstance. One other thing to note, if you're self-preparing your own S corporation tax return as a non-tax professional, I would strongly caution you not to do it. There are too many rules and requirements that are often overlooked or missed. I made a video breaking down someone's self-prepared S corporation tax return that I'll link up at the end. And there you have it, a quick overview of how S corporation owners and shareholders can approach health insurance premiums for optimum tax benefits. Hope this video has given you a clearer understanding of your options and the advantages you can leverage as an S Corporation business owner. If you found this information helpful, don't forget to hit the like button and subscribe for more content like this one. I normally don't do this, but if you want a more detailed explanation of this, check out Jason Knott's video up here. It's really good, and he breaks down everything better than I could. Thanks for watching, and I'll see you in the next video.